Hello friends, we are homeworkaustralia.com. We do Homework Australia assignment. Cost concept assignment help. Assets and expenses are recorded in the books of account at their actual cost to the business. Cost is the amount originally paid in arm's length transactions. Cost concept, which is closely related to going concern assumption, therefore, implies that an asset is recorded in the accounting records at a price paid for it, including all incidental expenses like installation charges, legal expenses, etc. Since the original or acquisition cost relates to past, it is referred to as historical cost. It is the basis of valuation of the assets in the financial statements. The word ordinarily is used since there are certain situations in which accounting records are changed to reflect changes in market values, for example, in the case of investments and inventories. It means that balance sheet will continue to show the assets at their original cost or acquisition price and not at their present worth or market value. There are, however, two exceptions to this general rule. The cost concept does not mean that assets continue to be recorded at their original price for as long as the business owns them. Their cost is steadily reduced, systematically called depreciation. Thus, we can restate the cost concept by emphasizing that the cost concept means original cost less depreciation. It may be added that the depreciation has no relationship with market value or the real worth of the asset to the company. 2. The cost concept does not create problem of value or real worth in the case of current assets, that is, the assets which are held by the business enterprises for a short time. Their market values are practically in correspondence with the acquisition cost, for example, cash, readily marketable securities, the sums receivable from the debtors, inventories held for a short period, etc. It may be added that sometimes the values of the fixed assets undergo upward to downward revision, as a matter of practical necessity. Such revaluations have to be disclosed according to Schedule V, Part I, of the Companies Act in terms of the amount and date of the revaluation for a subsequent period of 5 years. The consequences of effects of cost principle are: assets are valued at cost or cost-derived amounts, for example, cost minus depreciation. 2. Items which have no cost are ignored, that is, if the business entity does not pay anything for an asset, it would not appear in the books of account. The goodwill would appear in the accounts only when the enterprise has purchased this intangible asset for a price. 3. Unrealized gains are ignored. 4. The real value of the capital employed in the business is not available in the balance sheet. Thanks for watching this video. Subscribe, like and share our videos.